Hello and welcome back to my channel. This is Sam once again. This is the continuation of the first chapter. This is the second chapter of trading terminology course. If you guys haven't watched the first chapter, then here is the link in the description as well. Do make sure to watch the first chapter. Okay, the types of traders. There are different types of traders. One is the one who is investors. Investors are someone who is long term. Like you invested in Bitcoin. There are so many Bitcoin investors who were invested like 10-15 years back. I guess they are Illuminati. Okay, so there are many who invested a long time back. The wallet has been like kept for 10-15 years and the wallet hasn't been used at all. Think about the conviction they had about Bitcoin, unless they actually created it. Like, no, I didn't say anything. Yeah, there are long-term investors as well who actually buy it, forget it, and then they sell it in long term. That's called long-term, or the investors. Like we invest as well. And there are swing traders as well, like people who buy it and they keep it for like a certain amount of time, maybe like 3, 4, 5 weeks, or maybe like maximum 2 months, and they sell it off. That's called swing traders. There are intraday, is like the trading. You buy the same day and you sell the same day, max to max. The next day you sell it off. That's called intraday. And there is scalping as well. Scalping is like you just scalp a 2 to 4%, maximum 5%. These are the different kind of. So you have to decide what kind of trader you are. So if you are too emotional, I would ask you rather stay away from scalping unless you can control your emotion completely. Swing trade is like when you're working, you have a job, you can just do swing trading. You buy and you forget for a few weeks and then you can just sell it off. Exchanges, many of you guys are asking about the exchange, which exchange you should trade, and crypto is different and traditional is different. For traditional, I use like the ICFX Pro, Pepperstone and all, like to trade mostly the gold and silvers and all, sometimes oil as well. For crypto, there are so many exchanges. Binance is there, KuCoin is there. They both are very big and huge, but then they have a lot of regulation coming into play as well. Mexi is there, Gate.io, Bybit. Country, the regulation changes, and most of the country that doesn't allow crypto, so the regulation for the taxes are different. If you are from a different country and you want to know like which changes are allowed, put the questions in the comment box and I will try to answer all your questions. Whatever confusion or your doubts you have, TradingView is one of the largest and one of the best platform for reading the charts and doing that analysis. So definitely you need to get TradingView. I will leave the link in the description. It's free completely. There's no charge unless you want to go for the pro or something, but I don't prefer you to go for the pro, because if you're a beginner, you don't have to pay for anything. Don't even buy it, don't choose anything. And even for the free, there are a lot of features that you can use. You don't have to go for the pro version or premium or essential or whatever. Just stick to the free one for now. Understand, once you get used to it, once you understand that yes, you are ready, then you can go for whatever plan you want to choose for. The link will be there in the description. Click it and you can get the TradingView for free. What are indicators? Indicators are like to understand like where the market is heading, calculate, analyze it, time for measurement, but in a different form. Indicators are Fibonacci, Gann, Elliott wave, or Bollinger Band. By the way, Bollinger Band, I have made a video for Bollinger Band. If you want to learn Bollinger Band, then the link will be there top, and I'll also leave the link in the description as well. This is Fibonacci will be here, Fibonacci, Gann, and Elliott wave will be here. I'm going to make a video for TradingView, how to use the TradingView, but that's going to be a long, very long video. Okay, what is bull trap and what is bear trap? I'm sure like many of you must heard about bull trap and bear trap. Who is trapping these animals? Why are they trapping these animals? Like what joy they're getting? It's the animals are there in the chart, and the animals are called retailers. The retailers, they are the one who gets trapped all the time. They just change their faces. Sometimes they get bulls and sometimes they become bears, and the smart money, they trap them. Let me show you in the chart. You see this? The market went up. There's like, okay, the market is going up. It's in a trend. Okay, this came down and again this goes up again. So it's like people are like joy, like voila, this is going up and we are going up. What happens? The retailer, they start pushing it, because why? I'll show you this. This candle was too big, the green candle. So this gives a feeling that the market is quite bullish, and they start trading. They give one candle, one big candle, and they started thinking, that they means the retailers started thinking, and to give an emotion, because you see the candle, this is with kind of a shaved bottom, but there is a wick, a small wick below the candles. These are wicks, that stick kind of coming out. This is a wick, and the below below one is wick as well, and this is the body of the candle. So the wick is not there in the bottom, that means it's shaved bottom. This is kind of a bullish scenario. That means the momentum is like quite high. The momentum was very strong, and it didn't give the bears a moment to go down to make it, because you know when the market goes down and pushes up like this one, the market went down and the bull started pushing up. So there is a wick over here, the wick form. Over here there is no wick, so that means the bears then got a moment, and the momentum was very bullish and the candle is too big as well. Retailers thought it's bullish and they started going bull. Everyone started going bull. So what happens? The smart money, which they bought it over here, they started selling from here. So the bull got trapped. It's called a bull trap. And the market, what happened to the market? The market went down. What did we make? We made an M pattern, double top. Okay, let me show you a scenario for bear trap. Bear trap, you can see this one. The market is normally going down. Okay, went up, down, up. Over here, the market actually came to this place. The retailers thought, because usually what happens to the retailers, they see the previous one. As soon as it goes down, the retailers thinks that the market is going down. They don't even wait for a confirmation. Confirmation is important for a trader. So they started pushing down. They started shorting the market. When they started shorting the market, the smart money, they started buying, longing the market. So this way, you see this, just came down below this. If you are a day trader, you will see a lot of candles over here. The retailers, they think that this is market is going down because it already broke this one. So once it went down and they started shorting the market, but the market makers, the smart money, they trap the bears because the retailers are bearish and they boom the market. They long the market. So the market went up, not only up, you can see where it went. They got burned. The candles burns them. Just don't trade looking at that the market has violated the previous low and it has broken the previous low. No, you need the confirmation, a proper confirmation with a different indicators and the strategies. So that's the way you're going to protect yourself. This is support and resistance, because most of the traders, I would say like majority of the traders, trade support and resistance, because this is the support and the support got broken. You see this? This was support for a long time. You see over here, I'll mark it for you. You see this one, see this one, see this one, support, 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 this one as well, this one as well. And when this happens, boom, they think that this is broken because these are the supports. These are the support, 1, 2, 3, 4, 5, 6, 7. This, they thought that support has been broken because there's a lot of time the support was tested. I'm sure like you don't understand support and resistance as of now. I'm going to tag it over here, and also I'll leave in the description box as well. Support and resistance is important. It's very important. You have to understand this, the basics, because when I started, it was support and resistance. That's the basic. Every trader, when they're newbie, they start with support and resistance. Once you understand this, you get a basic knowledge of how to trade and what to trade. Okay, so now I'm going to end this, and thank you very much. Now I remember I was supposed to give you about the impulse, correction. What is impulse and what is correction? Let me show it to you. This is a move, first move, right? And when this happens, this is a reaction to this move. So once I draw this Fibonacci, say about from here to here, what I see, the market made a correction of 50%. Fibonacci, you don't have to get into it. I'll explain Fibonacci and how to use Fibonacci, and yeah, the basic Fibonacci, of course. So this is a move, and this is the correction on the previous move. This is called correction. And what about this? This becomes correction to this previous move. This one becomes impulse to this move because this is bigger than this. So this is a correction now. How much correction? We can check it out from Fibonacci, and we see it's 78.6% to be making it easier for you. And again, this one is a correction to this previous move. This is a correction. Doesn't matter, because impulse is not something which is going up. Impulse can be down as well. How? Let me show it to you. This one is impulse. This is the impulse because this is bigger than this now. This becomes impulse. I'm not taking this one. Why? Because this is lower than this. So yeah, this becomes impulse. The one, the leg which is is, we call it leg. The move is a leg. This is leg. This one is bigger than this, so this becomes impulse. Now this is correction because this is smaller than this. This is correction, 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 impulse, right? Correction, 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 impulse. So that makes sense. This is how you select the impulse and correction. And once you do it, then only you understand what's the pivot points, swing points. It's same. So you have to get the points, which points you should start to calculate, to take into consideration. So if you don't get the points correct, your calculation, everything, all the numbers gets haywire, completely haywire, and you just lost it. If you get this right, so most of the things you're going to get right. Okay, let me tell you about the chart. Why is this color like this? So why do I use the black background when everybody is using the white background? There is a reason, because if you are a trader, most of the time you're watching the screen. Eyes are going to hurt. You'll find that most of the traders wearing the glasses. It's going to hurt your eyes, and sooner or later your vision is going to be hampered with that. So it's better to use the dark mode, and you get the dark mode from TradingView as well. You can change the settings and you can do it yourself as well. It's easier, and make it darker. Why is it not red? Yes, it's very important. Why is it not red? Red, from childhood we have been trained, we have been conditioned. Red is danger. When you see red anywhere, it means danger. Don't go there. We have been trained, we have been conditioned, stay out of red. So when we see red in the chart, it's on purpose. On purpose there. Why? I'm sure you will understand why. Because red is connected with your sentiments, your emotions, your psychology, and when you see red, your fear is activated. So in that way, when you are trading, your emotions should be kept aside. You don't have to be emotional, because once you are emotional with your trades, then mistakes happen. What I believe is better to avoid the red and to select the colors, whatever colors you feel like. Because when the digital world wasn't there, when the trading used to happen and you used to make the charts and the candles, they used to draw it with the hands. So they used to make it white and black, and they used to call white soldiers and black crows, though I hate that because that's racism, but then this is how it used to be. But now it's still called in that way, because if you still find it, if you start learning about the candles, still there with that. So yep, so I don't choose red because red is psychologically, emotionally connected. Choose any color you wish, but I would recommend to stay away from red. And don't feel shy to ask questions. The moment you are shy to ask questions, you have restricted yourself to learn. Learning means you are open to understand, you're open to learn. There is no age to learn for anyone. That was all. This chapter is over. The second chapter we have done, and that was fabulous. And thank you all who have watched all of it. Join the Telegram link, the free discussion, and please like and subscribe if you have absolutely learned something, and if you have understood something, if you want to help the channel to grow, because this takes a lot of hard work, a lot of dedication, motivation. I am dedicated to give it back to the community, give it back to the people, give it back to the universe. So if you find it helpful, please like, subscribe, and please give a comment. And it's absolutely free. I'm not charging anything for this. And if you have questions, feel free to drop in the comment box, or if you feel, you can come to the discussion room in the Telegram, and I am just a message away. Come there and we'll see you there. Thank you, and bye-bye.